CNBC TV18 gets you the top stories of the day. I'm Archana Shukla and you're watching Reporter's Diary. Let me toss it over to Shireen Bhan for an interesting story about how the government is planning to tax global internet giants like Google, Facebook and others. Over to you, Shireen.
Well, thanks very much. The government has cast the net in the union budget to tax top global internet companies. It has inserted an enabling provision to tax the Indian income of global digital companies on the basis of data collected from India. Now, this is different from the provisions introduced through the Finance Act of 2018, which proposed to use significant economic presence as a nexus to tax profits. However, those provisions did not specify the thresholds for application. Now, Budget 2020 proposes to replace that mechanism with data collection as the basis. The proposed rules will lead to tax on revenue from targeted advertisements to Indian customers, sale of data collected from India, and the sale of goods and services using data collected from India. However, this provision will be overridden by tax treaties once the OECD negotiations on this issue conclude. That's expected to happen by the end of 2020. Now, what does all of this mean? To take that discussion forward, we're joined by Akhilesh Ranjan, the convener of the Task Force on Direct Taxes, and N.S. Napinai, Supreme Court lawyer and cyber law expert. Mr. Ranjan and Napinai, many thanks for joining us. Sir, for the benefit of our viewers, let's just explain what exactly has happened. Now, the Finance Act of 2018 had brought in the significant economic presence rules. That has been deferred, and that's been deferred till the 1st of April 2021, ostensibly to give time to the OECD to come up with its proposed rules. What has happened now is that the Nexus Rules have been widened. Explain to us the approach and the rationale.
India had always believed that the right way of taxing the internet companies or the digital services was by defining an alternate nexus called the significant economic presence. Now, as you rightly said, that concept of that presence of that nexus had been introduced in the Act in 2018, but the thresholds had not been prescribed. And that is because of the ongoing discussions in the inclusive framework mandated by the G20 nations on finding a consensus solution amongst all countries. In consideration of that discussion going on and realizing that the consensus solution might come in by end of 2020, all that has been done really is to defer the provisions relating to significant economic presence from 18 to 21. That as you rightly pointed out. Now, so there's no real change as far as the provisions really go. It's just a deferment of the applicability to coincide with the ongoing discussions. The other part is the defining certain or specifying certain factors which will be considered while allocating profits. Now, that's a new thing that has come in this year, where we have stressed upon the importance of data. Both whether there is a significant economic presence or in the normal scenario, if data from India is being used or commercially exploited, then India must get a share of the revenues earned from that data. That's the underlying logic of that. And these are the three main scenarios that are mentioned out there in the finance bill. I think you'll notice that they are applicable for all types of attributions from 2021 assessment year. And for the significant economic presence also from 2022. So they will cover the whole range of attribution of income, not just digital services, but also all other types of services. So essentially it's saying that nobody had looked at this point earlier.
Sure.
Yes.
Well, nobody had looked at this point earlier, and that has now been brought in. Yeah.
Right. So the importance of data, the value of data. You are aware of the bill that is pending in Parliament, which also says that data belonging to Indians must remain in India. I mean, to some extent. So the value of data has been realized and all over the world, and we have now brought in provisions which say that if data generated from Indians is exploited commercially anywhere in any part of the world, then that company or enterprise which is exploiting that data will have to pay some amount of tax in India attributable to that data. So that's the importance of those amendments out there.
So let me just, for the benefit of our viewers, take you through what the budget proposes to do by way of that amendment. As per the proposed Nexus rules, the revenue arising from targeted advertisements to Indian customers, revenue from the sale of data collected from India, or revenue arising from the sale of goods and services using data collected from India shall be brought to tax as per domestic tax provisions. The new Nexus rules are proposed to be applicable from the 1st of April 2020, so we don't have to wait for a conclusion of the OECD negotiations. Now, Napinai, on a plain reading of the changes that have been brought in Budget 2020 to the Nexus rules, how practical are these?
That's a difficult question to answer, Shireen. But then let me just put it this way. Now, the three categories that are being put forth is to use the IP address as the basis for taxation. So the IP address decides the locality or the location to India, and they also then link it to three different aspects. One is if you advertise here, two is if you're selling the goods belonging to, selling data pertaining to residents of India, and the third, very interestingly, is of sale of goods and services based on data collected about residents in India. Now, with taking the last first, I do not see how or in what manner they are going to be able to connect the two, because there will be one separate set of data points which will show how whether the data belongs to Indians or not, and there will be another data point which will be with respect to the sale of goods and services. So to say that this sale of goods and services is based on data collected by or about Indians resident in India is going to be next to impossible. So I would say that is not a very practical issue. As far as the second category is concerned, effectively now then India is treating it as data as goods. You know, there I would say only this. You know, the qualifier there would be that whatever the tax bill may say, it will, the personal data protection bill which is on the anvil will have priority in terms of how data should be treated. Merely because a MNC is going to pay tax on data will not justify any kind of action with respect to that data. So I just wanted to put that out there to clarify on this aspect, so that nobody believes that merely because this is being treated as a taxable income will allow MNCs to use personal data beyond the scope of the Personal Data Protection Bill.
Sure. So you're saying that the Personal Data Protection Bill will override what the Budget or the Income Tax Act amendments say as far as taxability of data as a good is concerned. But on the issue of practicability, Mr. Ranjan, and that's a question that a lot of people are asking, while this looks good on paper, how is it actually going to be implemented on the ground?
No, I think, you see, the last limb was mentioned by the other speaker just now. Now, you see, the discussions that are going on in the inclusive framework, which is known as the Pillar 1 approach, that is talking about allocating income on the basis of marketing intangibles, and certain proxies are being developed which will indicate, which will take into account the contribution of the users. Now, you know that in the digital economy, the user can be a different person from the consumer or the customer. A customer can place an ad on Google, but the value of that ad is derived from the data generated by the user, who is someone different. So the allocation of income, even as per the discussions that are going on internationally, is to be made to the jurisdictions where the customers are resident and also where the users are residing. So when we say that any income which is arising from the sale of goods and services using data, that is precisely what is being discussed, and ways are being found. Of course, you can't find precise ways of valuing the contribution of data, And that's why you are using proxies, and those proxies and those formulaic approach is being developed to try and see how income can be attributed. So it's not impractical. It's difficult, but it's something which has to be done in the new age, in the new economy. We can't rely on old methods of computation. And so it will come about.
Yes, the user
Of course, the valuation of
participation
data
proposal
is still a problem.
Yes, you're right.
Yes.
You're right. The user participation proposal
the
is
data of
certainly
India
being
is being
considered
sold
at this
outside
point
now,
in
that's a
time.
very
Yeah. And Napina, I just wanted to make a point. Yes, go ahead, Napina.
Yeah, sorry, I was just saying, but why not just directly on the sale of goods or services to somebody in India? Because that's a point of contact which is easily identifiable. There is no real reason for a qualifier there to say that it would be based on sale of goods or services on the basis of data collected from residents in India. The latter part of it seems redundant. The very fact that you can link the sale of goods and services to somebody in India directly through either the completion of the e-commerce transaction online or the delivery of the product makes it a much more direct process of taxing such income in the hands of the MNC.
Right. Mr. Ranjan, I want to also ask you, sir, since Napina brought in the Data Privacy and Protection Bill, and of course that also deals with the issue of data localization. Now, the RBI has already mandated that as far as financial services companies are concerned, they need to have servers localized here in India. How is this going to now move in tandem with the significant economic presence rules, which for now have been deferred but will come into play as and when the OECD talks conclude? So localization and SEP, how will the two converge, sir? Because, a local server will perhaps be seen as a permanent establishment.
Well, that's right. Well, I would first of all agree that the taxability of any such income does not have any impact on the provisions of the data bill, which is pending before Parliament. That's an entirely different matter. I mean, whether the data is locally stored or not, just because it is taxed doesn't mean that it need not be stored, or vice versa. Now, localization of data can give rise to, if it is maintained in a server stationed in India. Yes, there could be a view which says that this can lead to a permanent establishment and can then lead to taxation of business income of those companies. But again, we need profit attribution rules. Just because something is sold in India by a foreign company doesn't mean that foreign company can be charged to tax on the profits from that. What is material is to find out the contribution or what business actually has been done in this jurisdiction in which it has been sold. So while the sale price can be taken as a proxy, can be taken as a starting point, a formula will have to be applied to it to find out that portion of the profit or the sale price which can be attributed to the particular jurisdiction. And for that we need various factors like the quantity of data, the number of users, etc., and various things can be put in out there. So while the server can lead to a permanent establishment, I think we will still need profit attribution rules, and those are the rules that are being discussed in the inclusive framework. Without those, and there has to be a consensus on how we use those attribution rules, otherwise there will be a massive amount of double taxation.
Yes. And that is a concern. But Napinai, as we move forward, because at least as far as the new Nexus rules are concerned, those come into effect on the 1st of April 2020. What do you see as the challenges or the clarifications that would be required as we move towards that?
Well, I think it's already started with Facebook raising this issue in terms of in exactly what manner and how these Nexus rules are going to be applied. But as I see it going forward, the last part, which I already pointed out, is likely to be the biggest thorn on the side of MNCs, where they will have to show in terms of how the nexus between data and the sale, point of sale, is going to happen. The second aspect, as I see it, is in terms of the data protection bill, as was already raised, as opposed to the sale of data concept. Now, again, there is a collection point with respect to the data, and there is a usage point with respect to that data. I do not see how these are going to be married, and it's also definitely going to be a huge task in front of the taxman to be able to show how the taxation rules are going to be formulated for that linking, And finally, when we talk about the second clause with respect to sale of data, there has to be clarity in terms of whether they are talking about anonymized, de-identified data also, and to what extent is that going to be taxable in terms of its usage.
Okay. Mr. Ranjan, what do you believe needs to be done by way of clarification from the taxman to ensure that we don't end up in dispute and litigation and confusion, sir?
No, I think these are all areas which are being worked upon. Solutions are being found. These are difficult questions, but then solutions are being found, and they're being found internationally at a multilateral level, and therefore the reason for that is to precisely to avoid disputes and avoid double taxation. So while India has put in these rules in its source rules, which the manner in which the income will be computed will have to be decided in a consensual fashion amongst all nations, and there are several ways now being discussed and thought about as to and how to build proxies and how to build equations and formulae which can compute the amount of income corresponding to various factors. Data is not just the only factor. There are, as I said, things like marketing intangibles, other intangibles which also create value. And so, just as it's difficult to value a marketing intangible, it's also difficult to value data. But then the contribution of these can be estimated by means of equations.
Well, these are going to be issues that we are going to have to see the government as well as companies that use data and, of course, platforms like Facebook, Amazon, etc. Deal with these questions. But the new Nexus rules are proposed to come into effect on the 1st of April 2020, and they will be overridden as and when there are tax treaties on the back of a decision that is taken by the OECD, which is expected by the end of the year. So this is a developing story. It's an evolving story, and we will get the two of you back again with us to bring in much more insight on how this is going to work. Akhilesh Ranjan and NS Napinai for this evening. Many thanks for joining us on the proposed changes in the budget 2020. It's time now for us to head into a break. Don't go anywhere. There's a lot